Aloha, YouTube investors. How is everybody doing today? My name is David Yansen. Welcome to my channel. Today is not September anymore, it's October 8th, Thursday, 2020, and we are looking at my Robinhood portfolio for the day. As you can see, I started this portfolio last year in June, and I don't add a lot to it. I don't make a lot of contributions to this one. My main portfolio is with M1 Finance with my Roth IRA. I do have an individual account with Fidelity. If you want to see those other videos, I do have playlists for you to check out. Everything is organized there, from Webull to some other apps that I signed up for, some other brokerages that I signed up for just to get the free stock. So check those videos out. Also check the link in the description if you would like to get any of those free stocks. If you aren't using those brokerages, or maybe you are using those brokerages but you just want to get the free stocks. To be honest, that's why I signed up for some of them. So anyway, my Robinhood account here, this is my growth portfolio. You can see I am up just a little bit over 8% all time. At one time, you can see way down here, I was down almost 23% and over $500. So this one has made a V-shaped recovery, but I did have to make some changes in order for it to get there. Otherwise, I could still be in the negative 500s or worse, probably negative 700s, if I hadn't made some changes. And we'll go through my holdings here in just a minute, and I'll show you what my return on these holdings are now, which kind of makes me look smart, but not really, because they were companies that I probably should have invested in anyway, with the exception of a few, and some of them I've only decided to pick up because of what's going on right now. So not the stay-at-home economy. I have other holdings in my other portfolios with M1 Finance and with Fidelity that were kind of stay-at-home portfolios, but those two brokerages I use mainly for dividend investing, because I am primarily a dividend investor, but I do the barbell approach where Robinhood is the growth side, and then the other two portfolios where the majority of my money is for dividend growth. So because the plan is, when I get that retirement age, even if I am still working 10, 15, 20 hours a week, I would like to primarily be able to live off of my dividends. So I don't have to sell the stock. I just get paid the dividend every single month. Now, I do have some holdings in this portfolio that are dividend paying, but it was just at the time, it was easy with Robinhood to be able to pick up shares with them because they were so cheap. And so this portfolio, I've made a lot of trades in because, one, it is easier with Robinhood. Two, it's my growth side, so I want a dollar cost average down, and I want to get the capital gains, where my other, with M1 Finance and with Fidelity, they're paying me a dividend. I'm not so much concerned on where I buy in at that company unless I've already bought in at such a really, really low price. So I do have Tesla over there, but again, that company, they don't pay a dividend, but they have so much growth ahead of them that I'm really not concerned about where I bought in with them. So for the day, we can look and see here that when the U.S. stock market closed, up over 0.5%, and then after hours, still up in the green there. I have a little bit of money of buying power, which I might use tomorrow. This $1.34, Robinhood does support fractional shares, so you can pick up shares of a company at pretty much any cost, just depending on the brokerage. Some minimum of $1, some minimum of $10. Just depends on the brokerage. With Robinhood, I think it's a minimum of $1. So I'll probably put this $1.34 into either Sirius XM Radio, which I wanted to talk to you about here. They are in the news because Sirius XM Radio, and this was my free stock, by the way. I got this one for free. I did buy another share of it, so I have 2 shares now. So my average cost is $3.15. They're a good company. They have a really, really good balance sheet, but their stock doesn't do very well. Spotify is outperforming them. Spotify has some other podcast. I think it's Joe Rogan now. So where SiriusXM Radio has Howard Stern, and he was huge when I was in high school, and when I was in college, all through the 90s and the 2000s when I was in high school and college, he was the guy on the radio, and he got the satellite radio business built up to what it is. So there's news. He says he hasn't seen the contract, but there's news that they want to extend him to a $120 million contract, which now an analyst said, I read this on Barron's, that they're projecting the stock to trade over $7, which I believe it has reached $7 a few times this year, once or twice maybe, but by and large it's kind of traded down in the 4s and the 5s. So I might just put that $1.34 into Sirius here, or I might wait for it to, I might try and pick up one more share and do a limit buy at $5 even, or $4.80 or something like that. I'm still thinking about it. So my percentage of gains here, you can see Lyft. I did buy one more share of Lyft, so now I have 5 of Lyft and 5 of Uber yesterday. So I'm only down a little bit over 2.5%. All my other holdings, for the most part, I have significant gains. And this international airline group, I can't believe how bad it is doing now. I bought more on the dip, and then the price fell some more. But like I mentioned in previous videos, I own 2 airlines, Hawaiian Airlines and this one, and I give reason as to why I have a video on Hawaiian Airlines, why I decided to buy into them, also about this group too. And I'll just tell you very quickly here, I do believe that there are people that had bought tickets like I did. I had bought a ticket to go to Australia in April of this year. The flight was canceled, and there are still countries that don't allow the U.S. to travel there because of the way that the country is right now and the situation that's going on in the world. So a lot of people had flights just canceled all at the last minute, like just overnight. Can't go anywhere, can't fly anywhere. And some people were stuck in countries for a little while. I know there were people that came back to Hawaii, it was on the news, and they were stuck either on that Princess cruise ship or someplace on the mainland or in Japan or someplace like that, where they either couldn't get a flight or they weren't being allowed to fly at the time because nobody really knew, how this whole thing was going to work out. So with all those vouchers and travel credits that are sitting out there, and even if the airlines only decide to go 0.5%, 25% full or whatever, there are people that have vouchers and credits for either honeymoons or birthdays or anniversaries or whatever, and they will be ready to jump on those planes. So I think that will provide good revenue for that next quarter, whenever this is that happens. I think these companies will jump up. And Peter Ingram, the CEO of Hawaiian Airlines, has said that the airline is not close to bankruptcy. They've been able to draw down credit. Of course, they've been doing layoffs like a lot of the other airlines have been doing. So they should be good, hopefully, to be able to make it to next summer. So my biggest return here, as you can see, is NEO, well over 300%. With them, I just got in so low with them. With that dip there, I was looking for another EV company to go into. I started reading up on NEO, and I decided to go with them. And now there is talk that they might break out above $25, where this month they have consistently been over $20. I know we're only 8 days into the month, but September was not a good month for the U.S. stock market. October is a little bit of mixed bags, even though we've had 2 straight days, yesterday and today, of trading in the green for the S&P 500, the NASDAQ, and the Dow. But I ended up getting in really, really low with NEO, and it turned out to be really good. So Starbucks, I mentioned in a previous video about those companies that I say people follow like a cult, like it's a religious cult. Starbucks is one, Amazon is one, and Costco is one. I own all 3 of those. Starbucks, I got in really low at like $68 at one point, just a little over $68. I did end up dollar cost averaging because I bought only 2 shares at the time, and I thought, man, this thing still hasn't really taken off anywhere, and a lot of their stores are still closed here in the US. So I ended up buying 3 more shares. So my average cost is at $73, but I still have a good return. If it does for some reason drop down to this 73, 74 again, I will buy some more because I really, really like the stock. And in that video I did talk about how, and this was 2-3 months ago, how I thought that they would be trading at $85. Now there is talk that they will consistently be trading at about $90, which is where they ended today. So if they stay at between 85 and 90, I'm very happy. So, but if it dips, I will be buying more because people absolutely love the products that Starbucks puts out. So Sony I bought into, and I got in really, really low. And I only got them, and down here, EA Sports and Activision Blizzard. I only got these companies because of the new consoles that are coming out next month. And like I said in the video about Sony, I put it on Reddit. I was like, does anybody think Sony is a good buy now at $63 here? And somebody responded and said, oh no, it's already priced in, don't do it or whatever. I don't think he actually said it, don't do it. I think he just said the price is already, the stock is already taking, because everybody knew that another PlayStation was going to come out. It's about every 5 years. And then the stock broke out all the way up to $80. Now it's been struggling a little bit into staying over 75, but I still think that when sales start up next month, and with the games, that the new games that will be coming out for the PlayStation 5 that are put out by EA and Activision Blizzard, that these stocks will do very, very well. So those are kind of the companies that I wanted to highlight. I do have some dividend paying companies here. Pfizer is just a dividend play, even though they do have some stage 3 trials that have been successful, that are positive, that are coming out. So, but I really just got into them for the dividend. And so, as you can see, my return's not that great with them. But I might buy 1 or 2 more shares if they drop down to 35 again. So please subscribe to the channel if you haven't already. Mahalo for everybody who has. Be safe and healthy. Aloha.